Hey everybody, Sabi here with a little update on getting stopped out earlier today while I was sleeping, which it didn't go to the take profit and stopped me out. Totally fine. Happens sometimes. It's okay. Just looking at the daily chart though, we have a series of higher highs and higher lows, getting kind of small, like not as volatile percentage wise as this stuff was down here. I mean, that was fairly large percentage move down, up, down. Now we're just kind of, I mean, it looks like up only to me, but we do have still higher high. This is still a higher low compared to those lows. If you do close the daily down there, look for a lower high. But the RSI right now is setting up nicely, and I thought we would get this at a deeper price, but we're coming up on a regression trend line on the RSI. And intraday, we may have actually tapped that. Can't be too sure. But it could suggest good things. And maybe we end up just using this trend line until it breaks. And that would be a major top, at least for a little while. Or it could be the end of cycle. We never know. But this could be something you want to put on your chart. The RSI, the Relative Strength Index, with this regression line. And if this keeps holding, then it'll keep pushing up in the strong zone. If it breaks, then it'll backtest it, and then it's down. But you'll likely have divergence that comes and backtests the 70 region before a total top on the daily. Zooming it down to the 4-hour chart to get a little more into the nitty gritty, and I want to take a trend-based fib retracement, or not the trend-based, just the fib retracement tool, and try to get, well, let's try to get more precise on this line. This is the start of the impulse, and we want to measure to the current all-time high. And keep in mind, I am in log scale, so let me change that over to linear. So here's linear. I do all my Elliot Wave stuff in linear scale. I find it works better. It's just kind of the way I always learned it. So I didn't start using log scale until I developed my other methods. But you can see we came right down to that 382. That is the first area you want to look for a bounce. If this is indeed a wave 1, 2, all of that's 3, a wave 4 often will bounce. You might grind this out a few times, bounce up, grab liquidity, come back down to the 0.5. That's an excellent wave 4. Another thing that you could possibly do from here is break the high, then come back to the 0.5 to make an expanded flat, some kind of ABC, which we've seen a lot in this cycle for the past 2 years. I have to zoom out on the daily to review that. But before I do, let's see if the RSI is telling us anything there. Not really. It is diverging, but you don't have like strong divergence. It's more of an exaggerated divergence, but it's there. It's getting there. Locally, we have not yet closed a higher high. I'd like to see a higher high close. I did enter a very small, well, technically very small. It's like a starter position down here with a 5% stop loss. So now it's pushing up. Now my stop loss is at break even. Just the 382 bounce fib. Pretty common to get a bounce there. I think it was towards the New York close. So I was like, yeah, let's throw it a bone. Let's see if that plays. So far, getting a bounce out of there. What I want to see, though, is a 4-hour higher high close than that close, which tells me to buy potentially the daily open. The exact price on that is 92,000, it looks like, just under 92. But you might get an order block or something like that, or it might encroach into this wick right here to go to previous support. That might be the buy, somewhere around 91.5 if it wants to get down there. But first things first, I want to see a 4-hour higher high close. Then I'll add to a trade there, keeping the same stop loss. And if price stops me out and then closes a higher high, then I just have to re-enter that way. It does happen sometimes, but I do like the 382 Fibonacci retracement from the impulse. And something I'm noticing, like Elliot Wave and basically a lot of pattern recognition stuff, is just doing the patterns over and over and recognizing those patterns. Elliot Wave is a method of measuring those waves and finding the repeating patterns and labeling them. It's a good labeling system, I find. So that's kind of the way I use it to keep track of the repeating waves. But I want to draw this out for you. Just the patterns repeating over and over. So if I was to take this low down here, look how price went up, consolidated, popped the high, then popped the low, and then double tapped it. From there, popped up, consolidated, popped the low, popped the high, back down. It's kind of repeating the same thing, if you know what I'm saying. So you consolidate up and down, consolidate up and down. And now we're doing this, consolidate up and down. Hopefully you see that. You'd see the pattern where it just does the same thing over and over. If you measure the retracement of this leg down, this went to the 382, bounced up and hit the 0.5. The next one, if you measure from this low up to this high, this was the 382, and it just pierced beyond it a little bit and went up from there. And if you measure this one, we just hit the 0.382. And now what happens from there? Do we bounce and repeat something like this, but bigger? Because they seem to be getting bigger as time goes on, and they actually retrace just a little bit less. I'd recommend going on your own chart and doing the Fibonacci retracements from high to low and see that they repeat. The retracements are repeating at the 382. And if the patterns are, I'm not saying it's going to happen, but these are roughly the same size. What if we get another one like this, maybe? That would be interesting. That would give you much higher targets. I'm not saying it's going to happen, but oh boy, if it does. So you never know. You set your stop and you let it run and see if it goes. I'm definitely going to be closing some profits at liquidity and see if it goes up and find another entry as time goes on. Now we'll go back out to the daily. I am going to switch this back over to log scale because I can't see it very well without doing that. It looks so much nicer. Everything looks so symmetrical and even. I'm a stickler for that. So I wanted to talk about how each one of these impulses went and what we could potentially expect in the impulse. So historically, what we've had since the low here, we had a little consolidation and a breakout. And that was a breakout that didn't backtest. And then we had a pullback and then a fake breakout that came right back down. And then we had this consolidation. We had this breakout. Then this fake breakout and flush back down. So the pattern that I'm kind of recognizing and suggesting we may be having here is breakout that doesn't backtest, then a fake breakout, then continuation, breakout that doesn't backtest, fake breakout, flush, and then continuation. So maybe we get a breakout that doesn't backtest, gives you another push up, fakes out, and then goes up. So maybe it's real break, fake break, then real break, then fake break, then real break. So it'll just alternate maybe. Just something that I've kind of been expecting this whole time. For a three wave, three wave, three wave. How high does it get? We will see. It really depends on how high this taps out before doing that choppy move that I'm kind of thinking might happen. probably also why I'm a fan of taking profits when you break a level. So like breaking above this, I closed some profits, got stopped out of the rest. It happens repeatedly. Same thing happened over here. Break out, get stopped out of the rest, and then waited all weekend for that to close. I would say the only way you're going to know whether this is continuing or not is the weekly candle close, because that was the tell over here. On the weekly, this closed a higher low. These are higher highs and higher lows, higher highs, higher lows. Until right there, you had a weekly close, lower low, consolidation. So as long as the weekly is closing higher highs and higher lows, it's game on. I mean, same thing with the daily. If the daily is closing higher highs and higher lows, let's keep on rocking. So that's my thought. I always look for my buys when we're trending up. Higher highs and higher lows tell me to look up without getting overconfident. And then once you see a lower low close, then you tighten up your stops. And we could look on a 2-hour chart here. It's just faster to do that than the 4-hour because I have to set that up. This one's just a quick little button, but you had a series of higher highs or lower lows and lower highs, lower low. This one on a 4-hour, this was still a lower low. If it would have closed a higher high, then you would buy the higher low, but you didn't get that, so price sold down. And I think somebody was asking me, is it okay to short this down to 85? And yeah, it's a potential to get down to 85 because you close the lower low until you change this around and make a higher high. But as long as you're making lower lows, lower highs on a 4-hour, you can continue down. But if you get down there to the 85 area, you're at risk of closing a lower low on the daily, and then you would look for a lower high. So if the market makers or whoever's running this market wants to maintain the uptrend, they're going to make sure that the daily candle won't close below 88 or so. Probably not below 86. I would say this area, I wouldn't want to see daily candle closures below that because then your trend is at risk. You're at risk of making a lower low, lower high scenario. That's when the sellers come in. The robots will just sell it. They don't care whether they like Bitcoin or not. They're just going to sell it. They don't care until price was to push up and make a higher high. Then they'll buy the crap out of it. And they don't think twice about it. They just do it. They're robots. Getting back to the 4-hour, just wanted to show what I'm looking at. Again, the 4-hour close, higher high. Try to buy the daily open or previous support, whichever one's going to give me a finished completed pattern and maintain the trend. If your 4-hour closes down here in these wicks, especially on the bottom half of that wick, I would probably be looking down and repeating this leg down. And this is just ABC, and you're going down to 87 before you bounce again. So just have that be an ABC, and then you would repeat this candle down to close that lower low, back test the daily open, and potentially repeat this leg down to the 87 area before this consolidation repeats. So then this would be your distribution, this would be your markdown phase, then you look for a reaccumulation that looks similar to that down at the bottom, if you get that. But currently I'm playing the 382 bounce and looking for a higher high on a 4-hour, buy the higher low, and push up to take profit at these liquidities up here, and potentially break that 100,000 from this posture. I think you're going to have just about everyone kind of, this is like, well, you don't buy the first drop, you buy the second drop. And maybe that drop never comes because, like I showed, those repeating patterns, the 382 was it. And if it does come, then you just know how to react and you know where to buy and where to set your stop loss. But for now, this might be as deep as you get for now, and you break the high, and then you do an expanded flat and come back down, so you wipe wipe out all the shorts, wipe out all the longs, and this may be your half cycle low that plays out like that. There are a lot of orders up here at the 100,000, and the market maker may have to take on too many sell orders to get through there. So if the market maker comes up there, grabs all those sell orders, they had to buy. Like all of these shorts, they market buy, which gives you fuel to push up. And then the market maker then assumes the opposite side of those positions. So he's net long or net short. So if the market maker is net short, he needs to go back down, drop those orders off to these guys, and then the market maker will be net long. Then he can push it back into markup. And that's why you get these types of moves where you seem to get progress, but then comes right back. And that happens on all time frames, just the market maker fixing his books. And then, it's just trading up and down. He's just trying to stay delta neutral. And there's a lot of orders up here. The same thing happened at previous all-time high at 74K. The price blasted right through that, which this can do the same thing if it decides to do that. Or it can make an ABC and then blast right through it. Either scenario is fine. We just have to trade it and protect our capital as we're doing it. So if price does come up, that's a break a level. Act like the market maker. Close some of your position up there. Just a little, you don't have to close it all. 10%, 25%, 50%, whatever you're comfortable with. I don't have a problem doing that because I can enter into a trending market, have plenty of experience doing it. Maybe others don't, but there's a learning process to it. You got to start somewhere. So if a trend is moving up, you take off 20%, and then it feels like it's going to keep pushing. Find a stop loss area for that 25%, add it back on, and just let it run. Just as long as you know how to enter the trending market. That's all. It's just fear. Your fear is getting in the way if you're not trading it appropriately. And there are ways to mitigate that fear. I'm going to try to make a video on that. Got some thoughts and ideas on it. This one's running a little long. It's going to take a while to process it, but hopefully this information helps you out. Trading from the higher high, higher low to liquidity. Take a little bit off. See if we get a higher high than this. Then buy the higher low. Push up. Or be ready to be stopped out and buy lower. At the 0.5 fib for a bounce maybe. Or maybe it goes deeper. Hopefully that makes sense and it's not too confusing with all my squiggles. Right now, my stop loss is right there. Have a good night. Keep them stops tight.